So now I go now to our policy direction. Some of our goals never change, are what we call the three pillars. Okay, they are price stability, financial stability, and what changes, of course, would be the environment under which we operate. And as I already said in the earlier part of my talk, we are quite confident that our inflation rate will be moving toward in a manner that is consistent with our medium-term targets. Okay, so if we fail to make inflation fall below 4% next year, we are quite confident that the inflation in 2024, the target in 2024 will be achieved. Now, my source of confidence is when I look at our history. Every time we have years of high inflation, the following years have lower inflation. Meaning the central bank knows how to use its tools and its policy rates and its monetary policy to help bring that about. Of course, as we all know now from the current experience, international supply shocks sometimes could be very high. By the way, there were instances when the supply shocks were very pleasant. I remember 2 years when inflation were actually way below 2%. Now, of course, financial stability is our second pillar. And as I already told you, when we look at the numbers, the capital adequacy, non-performing loans, loan loss reserves, our banks are really quite strong. And if I may say so, with people like TG, Limcauco, they are well run. Okay, next slide, please. And domestic growth will gain traction in spite of our policy rate increases. Our own calculation is, despite our surprise off-cycle 75 basis point policy rate increase, and despite our telegraphed message that we will increase the policy rate by either 25 basis points or 50 basis points in the August meeting, and maybe, depending on the data, more policy rate adjustments even before the end of the year. Or of course, it's also possible that we will not have them because the data may go one way or the other. The economy could take it. And indeed, if you look at the policy rates in relation to their historical levels, they're not very high. Of course, they're very high relative to the 2%, which in turn was historically too low. Okay, so we are committed to fostering an enabling environment that will make sure that the financial institutions under our supervision continue to contribute to both economic growth and stability. And with regards to inflation, the BSP is prepared to take all necessary policy actions to bring inflation toward a target consistent path over the long term, over the medium term, consistent with our first pillar, which is price stability. The BSP advocates for increased role of digital platform, which will not only make the payment system more efficient and faster, it will also make it more inclusive. So to conclude, we view the event of charting the course at the changing of the guard as an opportunity to pursue new policies and innovative strategies to propel the economy to even greater heights. I call each and everyone to participate in helping our nation follow the course that we are charting. and commit ourselves as guardians of the economy together with all the banks and all the departments of government to do this. Thank you very much.